Kathleen, Saga, Tax Principal and Head of Japanese Practice in KPMG Philippines. Welcome to KPMG PH Insights, the EOPT series, where we dissect and discuss significant tax matters. This series aims to provide you with KPMG's insights on the EOPT law, how we think it will impact taxpayers, and what we hope will be addressed in the rules and regulations. Joining me today is tax partner Ryan Cabello. Hi Ryan, I'm looking forward to our discussion today.
Hi Kathy, I'm glad to have a discussion on you on this. So far, over the course of the series, our colleagues already discussed certain features of the EOPT law, like the new taxpayer classification, electronic filing of returns and payment of taxes, deductibility of expenses without the need of withholding tax, taxation of expatriates, and changes on VAT for service transactions.
Right. That's right, Ryan. We've had a lot of discussion on EOPT. And so just to provide a recap, early this year, our president signed it into law and it took effect on January 22, 2024. So today, in the last of the EOPT series, we will be discussing significant updates on refunds. So Ryan, what comes to your mind when you hear the words tax refund?
Refund. Challenging? But rightfully so, because we know from our recollection of the basic taxation principle that refunds, just like other tax exceptions, are strictly construed against taxpayers. In other words, a taxpayer must sufficiently and convincingly establish through strict compliance with the conditions for the grant of tax refund.
I agree, Ryan, but I think it's important to put it out there. If you look at the rules and regulations as well as the law, really the government is not averse to tax refunds. It's just the government being government and putting in place stringent requirements for a claim for refund. That's just them trying to uphold the lifeblood theory so that taxes are not unnecessary, the collection of taxes are not unnecessarily hampered.
So comes now the EOPT law, which made some changes on certain provisions of the tax code on refunds, with a goal of balancing the interest of the government to generate revenues from the taxes collected and the interest of taxpayers to recover taxes they may have erroneously paid or claim excess unutilized taxes. Let's start with the revision of Section 58 of the tax code, which adds a new paragraph that says claims for tax credit or refund of unutilized excess creditable income tax will be given due course only if the income payment has been declared as part of the gross income per tax return. And the corresponding withholding taxes has been established. This is our BIR Form 2307 in general, and declared in the tax return where the corresponding income is also reported. What are your thoughts on this, Kat?
Well, I think that is only a codification of what we've seen in a lot of CTA cases. There's always that decision where the court says that the taxpayer should be able to prove that the income upon which the withholding tax was deducted was reported by the taxpayer in its gross income. So, it's just, I guess it's clearer now because it's in the law.
I agree with that observation, Kathy. Curiously, the fact of remittance of the taxes withheld were not included in the amendment. There is also a legislative intent to exclude fact of remittance as basis for the grant or denial of a refund. There is also no mention of it in the Working Draft Revenue Regulations or RR, at least at the version made available during the public consultation. So in the meantime, I will be holding out to see if there will be further developments regarding this matter, since the taxpayers can point out a legal provision that expressly excludes proof of remittance as a requirement for a successful refund claim.
That's right, Ryan. So under the EOPT law, there is another significant amendment which I think came from case law. And that is the amendment or the codification of claims for refunds of excess creditable taxes for those who are dissolving or ceasing operations. So in the past, that was not part of the tax code. But now there is a specific provision where the taxpayers who are dissolving or ceasing business operations are allowed to file a claim for refund of excess creditable taxes which they have carried forward.
You're right, Kathy. These amendments will surely help taxpayers in supporting their claims. The draft RR elaborated further that choosing the carryover in the income tax return, and applying excess income taxes to succeeding taxable years is generally irrevocable, and no application for cash refund or issuance of tax credit certificate shall be allowed except in case of taxpayers will permanently cease operations within the purview of Section 76 of the Tax Code. But for now, let's talk another kind of refund, which is on refund of unused input tax for VAT registered taxpayers. A lot of changes have been introduced through train and create laws, and the EOPT law seeks to further improve the VAT refund processes for our taxpayers. Firstly, it is good to know that taxpayer, closing their businesses can now apply not only for the tax credit certificate or TCC, but also a cash refund for any unutilized taxes. Previously, they can only apply for a TCC, which, may not be useful if they are no longer pursuing commercial activities.
That's true, Ryan. Cash is always good. So what other interesting amendments are there in the EOPT law as far as refund claims are concerned?
The EOPT law introduced risk-based classification system for VAT refund claims. Now, VAT refund claims shall be classified into three: low, medium, and high-risk claims, with the risk classification based on the amount of claim, compliance history, frequency of the filing of the claim, and other factors. So what does it mean? The draft RR provides that the medium and high-risk claims shall be subject to audit or other verification processes in accordance with the BIR audit program for the relevant year. This is actually the main reasons of more of our taxpayers for not applying for a refund, because they expect that they will be audited, and compliance before is not that easy, but hopefully based on this new EOPT law, it will somehow provide them guidance on how to improve and to erase this fear on applying for a refund. If the commissioner finds that the grant of refund is not proper, the commissioner must state in writing the legal and factual basis for the denial within the 90-day period.
Right. So in connection with that 90-day period for the commissioner to decide, I understand that there is a reversion to the pre-create rule where the taxpayer, if there is inaction on the part of the commissioner, may elevate their claim for refund to the Court of Tax Appeals or the CTA. So previously, the rule was the taxpayer has to receive a denial in whole or in part before they can file a judicial claim with the CTA. But now, under the EOPT, we reverted to the pre-create rule where a taxpayer may elevate their judicial claim within 30 days from the end of 90 days if there is inaction on the part of the commissioner. But let's just leave all this judicial claim talk first and let's go back to the risk-based classification for VAT refund claims.
Based on the draft RR for this provision, the BIR will be supplying stakeholders with further guidance on its implementation. For instance, the RR provides additional guidance on how the risk level of claims will be determined. First-time claimants will automatically be considered high risk for 3 taxable years of VAT refund claims. Taxpayers closing their business or changing their status from VAT to non-VAT will also be classified as high risk. The main risk factors the BIR will use, as mentioned earlier, is about the amount of claim, frequency of claims, compliance history, and other risk factors.
I understand also that under the draft regulations, the BIR aims to provide further categories and assign weights to categories so that, their goal is eventually to provide a more accurate classification system for the refund claims. But, my wish list really is for the regulations to provide specific guidance to taxpayers so that it will be easy for them to tell if their refund claim should be considered high, medium, or low. For example, we know that certain taxpayers are in industries where the right to refund is very straightforward. And so I'm hoping that those kinds of taxpayers will not have difficulty filing a claim for refund.
I am wishing that too, Kathy. So that taxpayers clearly entitled to refund will no longer have a difficult time dealing with our government. Now let's discuss the timeline for the refund. The draft RR provides that the 90-day period to process and decide on the claim on the application for VAT refund shall start from the filing of the claim or application up to the release of payment. An application will be considered filed upon submission of the invoices and other documents in support of the application. The BIR will then have 90 days to decide on the refund claim. So if the BIR does not act within the 90 days, the taxpayer claimant may elevate the case within 30 days to the Court of Tax Appeals. If that is the case, the administrative claim for refund will be considered moot and shall no longer be processed.
Right. That's true, Ryan. That's what I was referring to earlier when I spoke about the reversion to the pre-create rule. But now in the EOPT, there's an introduction of a new timeline for processing of VAT refund claims. And that is the 180-day period for the BIR to process all other claims for refund. So for VAT refunds, we have the 90 days. And for all other claims for refunds, we have the 180 days. And in the same manner, if the commissioner fails to act on the claim for refund within the 180-day processing period, the taxpayer may, within 30 days from the end of the 180 days, elevate the matter to the Court of Tax Appeals. And likewise, once the matter is elevated to the CTA, the administrative claim for refund at the BIR becomes moot as well.
The introduction of this 180-day period to rule on refund claim is actually beneficial to taxpayers because this can potentially shorten the waiting time for the resolution of their claims. In a way, this will also add a little pressure to the BIR to act upon the refund claims on a moving forward basis. Now let's talk about the amendment introduced by the EOPT law under Section 229. Section 229 was amended to align with Section 204. This provision has also been revised to state that no court proceedings shall be filed unless there's a full or partial denial of the BIR on the claim or there is an inaction on the part of the BIR within the 180-day period. In which case, within 30 days from the receipt of the decision denying the claim or after the expiration of the 180 days, the taxpayer can appeal the decision with the Court of Tax Appeals.
I agree with this amendment, Ryan. So in the past, taxpayers would usually square with the BIR because the BIR would argue that there was no exhaustion of administrative remedies. Or they would say that the taxpayer has prematurely filed their judicial claim. So now the rules are clear.
With this amendment, the legislative intention is to come between the taxpayer and the BIR, and it clearly states, okay, BIR, you have 180 days to decide on the refund claim. If you deny it, then taxpayer can appeal your decision to the Court of Tax Appeals. However, if you also don't act on it within 180 days, the taxpayer has the option to still appeal the case to the Court of Tax Appeals. I think this has already been settled in case law before, but the codification of it makes the rule more precise.
That's good, and I agree with how you put it, Ryan. The revision actually provides for clearer guidance on how VAT refund claims and all other kinds of refunds are processed by the BIR. But my real wish list is for us to get to a point where we just receive a check in the mail if it is shown that there is erroneously paid taxes or illegally collected taxes from taxpayers. So I'm hoping that, we're closer to that point.
Yes, that's, to add to that, I'm really admire other jurisdictions in the way they do refunds, in other jurisdictions, they, when you apply for a refund, within 5 working days, the refund will be there. And then after the refund, you will be examined. But at least the taxpayer already get their money. And if they are not compliant, of course, why are you applying refund? And then they will be penalized. That's my wish. Because taxpayers, they need funds. It's a working capital, and that's critical in taxpayers' operations and business. All right, I think that covers everything we can discuss on refunds under EOPT law, which also means we have reached the end of our session. And sadly, the end of our EOPT series. Thank you, Kathy, for sharing your thoughts and insights with me and our viewers today.
Thank you as well, Ryan. So these are really interesting times for both tax practitioners and taxpayers alike. Let's keep monitoring the draft regulations on the EOPT law.
Thank you for tuning in to KPMG PH Insights EOPT series. While this marks the end of the EOPT series, please stay tuned for the next installment of the KPMG PH Insights series.
To stay updated,
don't forget to subscribe.
bye!